The world has gone mad and the system is broken. So Ray Dalio is now starting to sound a little bit like Zero Hedge, and I guess he has for a while.
He's been calling for 1937 since like 1938, pretty much.
So it's easy to joke, but do we think that there's any kernels or sure, I'll go with that word. Any kernels of truth here?
I mean, this was actually one of the shorter ones of his for his LinkedIn blog. The easiest one, for he's railing against there's huge debt in the system and monetary policy is not going to be able to do what it once did. And I think the one thing that, and maybe people are giving, interest rates are too low, so it's people are taking on too much risk, yada, yada, yada. We haven't heard, this is nothing new. He was talking about pension and healthcare liability payments are continuing to increase.
You're yada, yada, yada-ing Ray Dalio.
I mean, because a lot of this stuff is not new. I think the pension stuff is probably the biggest worry. Here's the thing, though. All this stuff like large government deficits and lower interest rates and huge debt burdens and pension liabilities, he's saying the world is approaching a paradigm shift. Those things don't just turn on a dime. These things are going to be processes that take decades and decades to figure out, if ever in some cases. So I don't know how you can take these big, huge issues and say, all right, now here comes the shift. This is going to totally change everything. That's my problem with his thinking here. I feel like these macro hedge fund managers want to call for a paradigm shift like every 18 months, and the world doesn't work that way.
Well, you've said this in the past that these people maybe are experts on an earlier version of the world, which is harsh, but maybe fair.
So there was a quote from Paul Graham. I think he wrote a piece in like 2015 that I really liked, and he basically said, hang on, let me find this. Okay, so he's a technology investor. He did the Y Combinator thing. He wrote this in 2014, actually. He said, if the world were static, we could have oh boy, I can't say that one. Monotonically increasing confidence in our beliefs. The more experience a belief survive, the less likely it would be false. And most people implicitly believe something like this about their opinions, and they're justified in doing so with opinions about things that don't change much, like human nature. But you can't trust your opinions in the same way about things that change, which could include practically everything else. When experts are wrong, it's often because they're experts on an earlier version of the world. And I wonder...
You stole that?
If a lot of...
I thought that was an original thought.
Oh, yeah, I wish that was mine. I stole that, sorry. And so I wonder if a lot of these hedge fund managers that came up in the 70s, 80s, and 90s, and they had a certain way of doing things, and they saw the way that the Fed reacted to certain ways, and it doesn't really happen that way anymore. If they just have the wrong playbook now, and that's one of the big problems why they've been having such a hard time in these markets that they've been complaining about for the last 10 years.
Well, that's a fact.
So.
What you just said is a fact. However, what if he's right?
If he's right, let's say all these scary things are. What does that mean? Is he predicting hyperinflation? Returns are going to be lower. Like, what's the...
Just that there's way too much debt in the system. We're pulling forward future returns. Economically, in the markets.
I mean, people have been calling for too much debt in the system since the 1930s. What if this debt thing, in like government debt thing, what if it just is never the problem people make it out to be? And when we're his age, people are still complaining about it. What then?
I don't know. Well,
not wrong, just early?
Well, talk about if we're going to... Well, let's just read this quote that he said. He wrote, there is now so much money wanting to buy these dreams that in some cases venture capital investors are pushing money onto startups that don't want more money because they already have more than enough. But the investors are threatening to harm these companies by providing enormous support to their startup competitors if they don't take the money. End quote. It honestly sounds like somebody just told them what the Vision Fund is.
One of the big problems here is that I think the whole wealth inequality thing, rich people have too much money. And this is the reason we have negative interest rates. Like, it's okay to have negative interest rates and that so much money is sloshing around in private equity and venture capital.
Are you saying that risk parity drove interest rates negative?
Yes, it was his fault.
What are you saying?
I'm saying that the whole wealth inequality thing, with all the rich people owning financial assets and basically having no use for it right now, that's kind of driving what he's talking about here.
So Bill Gates is under assault by Elizabeth Warren. So this story about income inequality, wealth inequality, it's not going away. It's just going to get noisier and more vitriolic. He said that he has 60% of his money in stocks, which means He has $60 billion in stocks or index funds. It's a lot of money. What happens when Bill Gates goes to sell?
What happens if he goes to buy more? That's
Are
cash on the
ETFs
sidelines.
going to crash?
It's kind of funny because some people were saying 60% is way too much in equities for Bill Gates. And it's like, guess what? If you have $100 billion, it doesn't matter what you do with your money.